Hi, everyone. Welcome to the Iron Key podcast. My name is Joseph, the founder of Iron Key Capital. And today we have a Web3 gaming veteran joining us to discuss his new company, 3thix's. Welcome, Tim.
Thank you for having me. Appreciate it.
Well, we'd love to go deep into your background and the problem set that you're solving and really why you chose to build this next. But why don't we just start at the beginning? Would love to hear about your background in the blockchain and gaming space separately, and we can start there.
Sure. Yeah. So, been in the video game space for well over a decade now. I've started three studios. I've exited all three. We built one of the first language learning games. My first one, we sold that off and exited it. Built another studio with a guy named Chris Cross, the creator of Medal of Honor and head of THQ, Nexon, DreamWorks, etc. Him and I built a studio. We were part of the ID at Xbox team with Chris, Charlie, and gang, and then exited that to Game Pass, and then moved on to building the first ever influencer gaming company where we put influencers in video games, and Sugar Glaze did really well. We were consulting on a bunch of different games and ended up selling that studio as well. Kind of was when I moved into Web3, and so I'd been in the gaming space for a while, and I really was looking at what was going next. Chris had left and was at the head of Nexon at the time, and they were working on Maple Story. And so JJ, the CEO of Nexon, really wanted this massive walled garden. Like, this is pre-Fortnite, pre-Roblox, where one token was really the unifier of all their gaming titles at Nexon. You go back in time, back in 2015, free to play was really hated by a lot of people. No one really liked it. And it's kind of has a symbolic relationship with Web3, and how it's perceived today is very similar. And so when he was talking about the problems they were having at Nexon, I was like, I think the blockchain could solve that problem. And, I'd been investing for a long time in blockchain since, early 2011, 2010 when I was in college. And I was looking at what it could do from a gaming standpoint. Well, then at the same time, the European Union was coming into the Euro. I was at E3. I was talking to Cliffy B, the creator of Unreal. He was telling me about Fortnite, what it was called Gunslingers, and how it was going to be the first free-to-play console game. And all these things kind of started unraveling to really kind of triggering in my mind that blockchain was needed in games, that ability to audit. So I built the first ever blockchain gaming company. I wrote the patent for the use of blockchain in a video game and got the first ever SEC no action letter from the US government for an ERC20 token for gaming. We really set the pathway for everyone to walk down. So our first hire was a guy named JT Kunani. You guys probably know him as the founder of Polygon. So JD came and worked for us, built Polygon while working for us, and rolled that out. Of course, it was Matic at the time, but those were all issues that we were trying to fix early days back in 2016 and 17, trying to understand, like, how do we move forward with blockchain when Ethereum gas fees are 99 cents. So we built the first layer two. At that point, we put it into test nets, and we tried to break it. And at the time, we could see scalability was better, but still we could get up to 6 cents. And when you're talking about dollar transactions, 99-cent transactions, 6 cents is 6%. And so it was getting to be too expensive. And so then we built the first version of ZKs based on Mario Brothers and how we can computate transactions across the blockchain and do one transaction for a multitude of transactions at one time. That came with the SEC no action letter. And then we got the first credit card processing deal for video games and for cryptocurrencies. Then we got the first game on Apple, the first game on Google, the first game on Steam, second game on Epic, and then been following that pathway for the last almost 10 years now. But I think the Web3 market went one way and I went another way. And now it's kind of come back full circle to where I was at all along, which is like a publishing and digital rights management model.
Got it. I'd love for everyone to understand a little bit more about the Web3 gaming space in general as it relates to payments and
Yeah.
some of the players there and how that market has shaped out over the last couple of years.
Yeah, it's a big issue. If you think about any game that you've ever played, whether it's Web3 or not, most of the time, and let's say it's on your phone, but you can buy whatever it is you want to buy directly in the game. There's credit card processing, there's, gift cards, whatever it is, that you use to buy the in-game items and assets. Blockchain has had a really bad problem with this. It's been very, very hard to get payment processing into games. So our first investor was a company called Xsolla. Xsolla is the largest video game credit card processor in the world. They do Steam, they do Epic Games, Fortnite, Roblox, Scopely, etc. But what they don't do is Web3. So we use our relationship with Xsolla to go to those banks that they work with and get preferential treatment to be able to create our own credit card processing debit card. So now we have 700 different payment types. We can sell cryptocurrencies, NFTs, games of skills, etc., payouts, whatever we want to do, essentially making us like a mobile exchange, if you will. We can insert a white label exchange into any game, or we can sell their crypto, sell their NFTs, etc. And we utilize that to help with the onboarding of players. So if you think about the 30 million people in Web3, why is it such a small number if the ecosystem is so massive, right? I think right now, Bitcoin it's already past 100 grand, but it closes on 100 grand again. But the entire market of Web3 is almost $2 or $3 trillion. And so when you think about it from that standpoint, it's crazy to think about only 30 million people are active within the Web3 community. And of those 30 million, how many of them are playing games? Maybe a third of them. Now, there's 4 billion gamers in the world. Half the world plays video games. And the reason that we have this massive issue is because people that are building Web3 games don't quite understand the complexities around building video games. They understand Web3, they understand digital rights, they understand how the audit loops work, how being able to reward people, they understand those systems. What they don't understand is how the paywall works, how do waterfalls work, how do the money that needs to be sent out to everyone that's been involved in that game, how does that work? So there's all these different complexities, and the biggest one is from traditional video games. You know this, you lose 60% of your players at the first paywall. The paywall in crypto starts the moment you decide you want to play a crypto game. Because if you don't have cryptocurrency in your account, you don't already have a wallet set up, you can't play. And you have to go to Coinbase. You have to spend, money on Coinbase. You have to set up an account there. You have to wait 3 days for that money to settle in Coinbase, so that way you can send it out of Coinbase to another wallet. Once you send it to that wallet, then you can move it and then you can sign it into the game. Well, let's say you put 20 bucks in, and by the time, 3 days has passed, you probably don't care anymore. If you, let's say you do, you now send it to your other wallet. Maybe gas fees were normal that day. And so you have $19. Well, then you have to put it into your game, and there's a gas fee signing there. Now you have like $18. You've lost money just trying to play this game. You haven't even got to the game yet. It's a big problem. And payments haven't been able to fix it. So companies like MoonPay and Transact can do NFTs. MoonPay can do crypto, but they have a massive minimum because they don't have their own rails. They don't have the ability to go straight to the bank and say, "Hey, we want to do this," because unfortunately, they don't process enough money. Even though they process for Binance and all these major companies, the real winners right now in Web3 are the stable tokens. Most money is inserted into the economy through stable tokens. So, USDC and Tether are holding everyone's money, which is wild because, Tether is the most valuable company in the world based on profit because they have 80 employees and they're printing $300 million a month is what they're making on their 6% annum holding bonds in the United States and, putting it into high yield savings. People think that MoonPay is doing it. It's not MoonPay. When you go into a system like crypto, you insert on the first ramp, and maybe you buy Bitcoin, maybe you buy Ethereum, and then you go off and you trade that, you swap it, you're in Phantom, maybe you're on Solana buying meme coins, you're swapping into these other coins. But when you go to exit, let's say you just want to stabilize, 9 times out of 10, most people put their money into Tether or USDC until you exit the system fully, all the way out of crypto. That money is with Tether and USDC. It's not with MoonPay or Binance or those banks. And so there's a big issue there. Now, if they were to transact as much as, like, say, an Xsolla, they could go and get their own rails, but they couldn't. So we were able to do it because of Xsolla. And so now we have our own licenses, we have our own payments. We work with companies like Nuvei and WorldPay and Visa, MasterCard. We have direct rails around the world, 200 different regions, and we can solve the biggest onboarding process problem in Web3 today. That is being able to buy and search yourself at the point of attention, right? Whatever it was that brought you to Web3, to be able to do it right there matters and not having to go to exchanges. A good example is like you're going to buy groceries, you don't stop at the ATM first, right? You just go in with your debit card and you buy groceries. We give that ability to Web3, and no one else has been able to do it to date.
Understood. Yeah. And from a consumer behavior standpoint, that's huge drop off.
If people believe that crypto is the future of financial systems, it makes sense that 30 million are what's contributing to a $3 trillion market cap, right? Now, imagine when we have 300 million, just the population of America, how big that market cap would be. When we have the population of a billion, so China, what that market cap would be. We've only seen the early onslaught of this, and the way to do that is to give them the ability to insert themselves at the point of attraction with the money that they actually have in their pocket today.
Yep. And with attention spans being as short as they are, is a huge problem and will become more of a problem.
Yeah, I mean, if you're anything like me, I tend to think a lot of people are becoming more and more like this. You're less likely to insert any of your information into a website, right? So to even get a Coinbase account to put money in, I have to go sign up for another account. So like, I'm attracted to your digital theme park or your game or whatever it is I want to go do. But now I have to go over here and I have to give this person I've never heard of all of my information, very personal information. I got to connect my bank account to it. I got to give them my credit card. I got to take a picture of myself and send my ID next to it. It feels like I'm about to be stolen from. Like this feels weird, right? And that's a big issue. How many people are going to do that? The number substantially drops. Maybe you had a, 60% conversion. Now you're like 5% conversion. That's the difference between 30 million active wallets and the hundreds of millions of active wallets that we should be seeing right now. It's all due to payments.
Understood. The payment spaces, the defensibility piece. Why don't we transition into a little bit more of the overarching strategy around the, app ecosystem and the ad tech
Yeah.
and go down that road and then ultimately arrive at kind of more of like the go-to-market strategy with the Trojan horse. Would love to hear that from you.
Yeah, so the ad tech layer works hand in hand with the payment system. So what we do is we've copied a little bit of what LiveRamp and Axiom have done with Visa credit cards information and utilized that to create new consumption models. So we use AI to look at what you're buying at a micro level, whether that's in a video game that's on chain or on a website, whatever it is. We look at it from a micro level. So let's say like you're playing Gran Turismo and you buy a Porsche, you're playing Roblox and you buy, a certain type of clothing for your avatar, whatever that may be. We start to look at what you put in your cart, what you purchase out of your cart, and we tie that all to your wallet ID. So there's these new data laws around the world like GDPR, COPPA compliance, CCPA. All these are privacy laws, basically saying that they cannot use your personal information to serve an ad to you. So the ad world has lost all of its efficacy. The value of an ad has gone up because it's harder to get someone to convert, but the actual ability for the ad to get you to convert has gone down. So there's this weird like in between that doesn't make a lot of sense. So Facebook and Apple and Google have raised their prices while the actual ability to get the ad to convert, so the cost of acquisition is going way up while the actual efficacy of you converting is going way down. So a good example, the average click-through rate is about 5%. The average conversion on a website is about 2%. So if you're only sending 5 out of 100 to your website, you have to multiply those numbers by 10 before one person converts. You need to send on average 50 people to your website before one person buys anything. And then when you think of the click-through rates and what it costs to scroll, so it's about 10 cents to scroll past an ad. It's about $3 to click on an ad. So you've spent $250, $25 for every cohort of the 5 people going over times 10, 250 before you even sell one thing on your website. The cost per acquisition is getting to be excruciating. It doesn't make sense. And the blockchain solves a lot of that. So we take all that consumption data and instead of advertising to you, as Joseph, I advertise to you based on your wallet ID, your address. Your ID becomes your identifier online. Blockchain is decentralized. I don't need to know who you are, but instead, what matters to me is what you are, what you like, what you buy, who you play with, what games are you playing, how likely are you to actually buy. When you think of it from a micro level, right? A good example I like to talk about is like Rolex watches. Visa could not tell Rolex that you like Rolex until you bought a Rolex. But in Roblox, I can see a sub $1 at a microtransaction that you like Rolex, that you bought it for a couple cents and you have it in your Roblox account. Those things matter, and we can start cultivating those relationships. So we take all the consumption data from our credit card processing and we license that data to the foundation who owns our ad layer. So the ad tech layer, which has companies like Pepsi Foods and different companies like that want to advertise in video games, like branding companies. So Procter and Gamble is one of our partners. They're all advertising in this model where we take money into escrow and we basically pay you direct to consumer for every ad that you see because your time, in our opinion, is yours and it's your value. And so What we do is we make money on the credit card processing. We license that to the ad tech layer, which is the foundation. The foundation then serves ads in the games that we partner with, and they're able to then turn around and pay you directly for every ad that you see. And then we work with our partners and the game companies to convert the tokens and the items that we gave you into their tokens. So like Roblox no longer needs to have crypto in their game. We'll trade our token for Robux, or we'll let you take it out and sell it on the exchange. So you can transfer your EBX for your ETX, and you can convert that on an exchange. You can sell it. You can do what you like with it. At the end of the day, the real value is back to the players and developers of the games. We make money on the credit card side, and then we make money on the ad side by basically going to Roblox and saying, hey, sell us your token at wholesale. We'll buy it from you. So you see it as a player, dollar for dollar trade. Maybe we paid 80 cents instead of a dollar. That 20 cents then goes back to the foundation ecosystem and then is paid out to those people by buying and burning our own tokens.
Got it. Makes sense. And in terms of the app ecosystem side, are developers able to build their own applications here?
Very simple. So we have an SDK for if you're on Unity or Unreal, you could just plug it in. That'll give you our credit card payments. That'll give you our ad network. And we partner with other ad tech layers. So like companies like Monetizer, Ad Colony, etc., Unity. And we could pull their ads in and we can service them because we become like the new Apple, if you will. So IDFA was Apple's product. Google has their own version of it, but we become the identifier product that the advertisers need to be able to serve ads to you. So we match you with the pixels or the demos or the geos that they're looking to hit based on our AI and our data lakes and our lookalike models. We're able to then service them and then they can run their ads within our network.
Understood. Before we move on, just want to touch on the patent that you have. Like, how core is it to your strategy? Just want to understand how that integrates or protects.
I don't think the idea of the patent is to be defensive, right? A lot of Web3 is open source community, and I think that's important for Web3 to grow. So my patent is the use of blockchain in a video game via custodial wallets. It also has a patent on the use of what we call a custodial wallet being converted into a cookie, which is exactly what our ad tech layer does, right? It basically takes a custodial wallet and makes it a cookie based on you. So what we have is what we call the vault. So you as a player see one easy to understand view of all the items you have in every game that is in our network, every token that you hold, everything you could download, other wallets to us like your MetaMask or Solana. Basically, you're just giving us a link to that account so we could see what's in it. And we can create one easy to understand view of what you have in all these accounts. Behind that, and why we call it the vault, is thousands of safety deposit boxes, custodial wallets, essentially. And those custodial wallets are, in fact, your essence. They're your digital ID in every single game that you play, on every single website, on every single DApp, etc., all being aggregated into one view. And that patent is basically the use of blockchain via custodial wallets in game. So it protects the entire vault system. So I don't think a lot of gaming companies are going to introduce non-custodial wallets. And we're seeing a shift right now in Web3. A lot more people are moving back to custodial. Early days of Web3, it was like non-custodial. We had this degen utopia. You control your own finances, you control your own management. People like easy, and it's never going to change. Every game that you've ever played has a custodial wallet in it, all the way back to like Mario Brothers. You see your tokens in the top corner, Sonic the Hedgehog, there's tokens in the top corner. That is a custodial wallet. It's running transactions for you in real time. Gaming isn't going to change. That system works. Nobody wants to stop in the middle of a game, like in the middle of fighting a boss, and say, I agree to signing into, being able to do something. They just want to be able to do it. They want to act fast. They want to play the game. And so custodial wallets will stay. So that's the first thing my patent's about. The second thing my patent's about is the use of custodial wallets as a cookie. So basically, we're driving data off of everything you're doing in a game, whether you play for an hour, whether you're playing Roblox, whether you're playing with ID number and you're doing some kind of bounty system with these guys. Do you go and collect rewards? Do you watch ads? We're looking at all these little pieces of what this wallet is doing. How does it interact? And we're breaking that down into a modern day cookie. A cookie that doesn't personally grab any of your personal information, is completely decentralized on the blockchain, but it knows who you are based on how you react to things online, right? How you do things, how you buy things. If you bought XYZ, good example, like I like to talk about is like if you're playing Madden football and we see that you buy a Cowboys jersey and you buy an Emmitt Smith card and you buy, I know one, you're a football fan. Two, you're probably over the age of 30 because you know who Emmitt Smith is. Three, you're a Cowboys fan. Four, you probably live somewhere around Texas near Dallas. None of that did I need to know anything about you to figure that out. I can take all that information and use AI to create an assumption model based on your in-game consumption. And so that patent protects all of that. And then we serve that through encrypted pixels to ad networks to be able to serve ads. And then we directly make them pay you instead of paying, say, Facebook or us or anybody else. We give all the money and all the time back. So we're really, the reason our name is ethics is we don't want to take away from game developers or publishers, and we don't want to take away from players.
Got it. Makes a lot of sense. What does 2025 look like for you guys? What are some key milestones you're looking at?
It's going to be a crazy year. I'm excited about it. We're coming into a generational change in Web3. I think this is the last year we'll see a major bull run that makes multimillionaires, but I also think it's one of the first years we're going to see mass adoption. I think the economic environment of America is leading people away from the stock market and fintech as we know it in that realm and more into a decentralized. We have a political election this year has led to pro crypto president, a pro crypto vice president, and a pro crypto House and Senate. So, we're looking at, I think it's like 200 elected officials that are Web3 pros that like what we're doing in crypto, that like this. Then, above all, I think the vertical around Web3 companies from America being tax exempt will lead a lot of people to want to invest and participate in the Web3 economies. And then, of course, the ETFs will keep growing. So I kind of look at Bitcoin very much like gold. If the stock market goes down, gold goes up. I think the same thing is for Bitcoin. And Bitcoin will lead to other cryptos and other fields. So I think we'll see our economy kind of have a low point. We have a lot of bonds coming out this year, but I think it's going to lead to crypto growing. Now, with that being said, Ethics is doing some crazy stuff. We're signing 3 to 5 games a week right now, 3 to 5 dApps, 3 to 5 websites, not just games, but like all sorts of things that need financial help, payment solutions, etc. We have a token launch that'll be coming probably late Q1, early Q2. We have a node sale. We have partnerships that we'll be announcing. It's going to be a year of trying to hang on. I think we're jet set for, cruising at an extremely fast pace, and we have to be as diligent and as mindful as possible to keep our eye on the target. And so for us, it's really how do we grow? It's how do we sustain our growth in a measurable way in which we don't lose our footing. We don't want to be like every other Web3 company that has come and gone because they were spending millions of dollars on things they didn't need, or millions of dollars on marketing, or millions of dollars on a party or lavish events. We have to keep our eye on the target. And we have GDC in February and March. We have conferences around the world that we'll be a part of. Xsolla is the biggest sponsor, so we'll be there. We'll be working with all the game devs. We'll be moving companies like Unity into working with us and redefining how they were running ads within mobile games. We'll be looking at things like how do we help Epic Games. So I said earlier, Xsolla does all the payments for Steam and for Epic. And so a lot of people have been not allowed to put Web3 games into Steam, into Epic. With us being like their Web3 version, we could help them do those payments, and we can get games on those platforms. So now we see major gaming developers building because they have a web platform to publish on and distribute. There's a lot of things that I think are going to be coming, and we're just at the precipice.
Yeah, I agree. It seems like there's a lot. It's going to be quite the domino effect as these milestones start to get knocked over. My last question for you, Tim, is a little bit more forward thinking around exit strategy for the company, how you see this really evolving over the next 3 to 5 years in terms of big tech and how they approach gaming, like these like Apple Arcade and these other big tech companies with their gaming, and how you kind of see this company fitting in the long run.
Yeah, big tech sucks at gaming. Let's be real. I think gaming acts as our cave. It's kind of like we get to grow into a point where we can come out and, there's nothing they can do to us at that point. But going back to the patent, that makes us acquirable. We're not going to defend our patent And it's too expensive and it's not fair to our investors for us to go out, spend millions of dollars in legal fees to try to defend a patent. But it makes us acquirable. Google or Apple or Unity or Iron Source, Microsoft, any of those people, Samsung, all of Japan, all these people that are really looking at Web3. So like Sony, who's looking to come into this round, right? Like those kind of people are going to want to acquire us because then they are the kind of people that defend patents, right? If you look at IBM, they own the most patents of any company in the world. There's a reason they own them, and there's a reason they have them. They absolutely will defend them because they're the greatest patent trolls of all time. Big companies want patents. So our first exit strategy is the fact that we have that. That makes us absolutely acquirable. It makes us sought after over all of our competition. There's nothing that they can do that they would be able to ever overcome that. The second thing, like we go back to gaming, is not great on those platforms. So Apple and Google have tried arcade, they've tried Stadia, it failed. The reason it failed is because they're too corporate. They don't understand how these things work. They don't understand gaming. Stadia was a good idea in essence, but when you look at what Game Pass did, it did it better, right? Why would I give Google, 19.99 a month to get a controller that plays all these games, but I don't know what those games are. They're behind the curtain. Game Pass didn't do that. They said, hey, I'll show you all these games and I'll let you buy them, or you can sign up to the subscription. You can move on and play these games. That was a better model. And I think what we're doing is creating these massive walled gardens where companies like EA Sports can have one token for all their games. And we have the SEC no action letter and the tools and the wallets that they can have for free. So they can onboard all this. We have the payment system. They can onboard all this and don't have to worry about it. We can create all these token models based on my no action letter to be able to help them to create, their own economies of scale. That's where blockchain really gets into the thick of things. Digital rights management systems, where, if you look at like how these token models for NFTs make sense for free to play. I think that's the next version of free to play, is where you see companies allowing secondary markets to sell items to other players, right? We've had these models forever, right? Go all the way back to World of Warcraft. China used to have people in prison grinding out World of Warcraft gold to sell on eBay. That was the first Web3 secondary market to ever exist. Those things are coming back. They're coming back fast. People need those tools. Ethics has the payments, the wallets, and the ad network to make those systems work without them having to build anything. It's a one-click solution. So I think we're going to get acquired by one of these big brands in order to have all that, and then they're going to use it as their own monopoly, essentially. They're going to corner themselves into a patent. They're going to say, stop doing it to everyone else. Now, I think as we grow in the next 3 to 5 years, as you said, whether if we let someone acquire us, if we don't, I think if we don't, it grows to the internet. We start looking at like how do we become the next Apple or Google, right? How do we become the new ad tech layer of the internet? I like to think of like how Honey Browser has their widget where we create tokens for like companies like Target, companies like Macy's, whoever. And we have this token model that's rewarding and redeeming people for being active on social media, being active within their ads, being active in their web. Well, we only make money off affiliate fees. So as you go to those websites, if you've been a participant in those economies, they're rewarding you with the ad money that they were giving to Facebook before. Instead, they're just minting a token that's then able to be rewarded on their website. So imagine walking in Target and having the Ethics app on your phone or Ethics custodial wallet, the vault on your phone, and it knows you're there because of geo tracking, and it says, "Hey, you have $22 to spend at Target. Go crazy." Well, on top of spending that $22, they're going to spend more, and we're going to ask Target to pay us an affiliate fee. And so they're going to get to keep it, all their ad money that they were spending. I know for a fact that Target spends $20 million a month just on Instagram. They get to keep all that money. Instead, they're going to give it away to people that are in their economy. And then those people are going to buy things. And then when they buy things, that's going to pay to the affiliate network, which is a part of the ad network, which all gets buy and burn on the token. So the token could push itself out on its own. The credit card processing, we make 5% on that. We're very ethical about it. We don't ever change our price. We don't ever add to it. We have full fraud and chargeback support from a company called Insure. So we're the only people in the world that can sell crypto and not ever have to worry about charges and fraud. And we get to have that, and that makes 5% on every transaction. So the trillions of dollars out there that's going through Web3, I think it's going to be in multitudes of magnitude bigger. as we were able to let people come on. So imagine that, then take 5% of it. That's kind of how all big banks work. And so we'll have that too. So either we exit to a major company like a Google or an Apple, or we hunker down and we put our helmet on and we plow through them.
Yep. All right. Well, 2025 will certainly be exciting. Thanks for joining the podcast, Tim. Anything you want to share? Any links?
Yeah, I encourage everyone to go check out our websites. If you want to Google ethics or myself, there's a lot of stuff out there. Chris, our CTO, is the CTO Wire, has $2.5 billion in exits under his belt. Was one of the first guys to be on IPv6, helped get Wi-Fi on planes, has a technical Emmy award. Very solid team behind us. And then we're backed by some of the biggest people in the crypto space and the gaming space, like Xsolla, Republic. Republic built our entire token model. Guys like Andrew Durkee are on our board. The right team, I think, the right time, and the right place. So I encourage everyone to do their research and take a look and reach out with questions. We're always active.
Sounds great. All right, Tim. Thanks for chatting with us.
But